Alright, hello and welcome to Camel Finance. I'm your boy Camel, and it's a big week this week. It's a big week this week because it is FOMC, the Federal Open Market Committee. These seem to me to be coming more and more frequently, and they seem to be having more and more of an impact on our increasingly fickle markets. Personally, I do not trade FOMC. For me, I'm not a day trader, I'm not a intraday scalp trader or anything like that. If you are, and that's how you make your bread and butter, that's fine, you crack on. But for me, I'm a medium-term swing trader, and FOMC, frankly, for me, would just be an opportunity to give my broker my stop losses. So in the interest of not getting chopped into pieces and for no real reason, whipsawed around all over the place, I just decide to go fishing for FOMC week, and I'll come back and start paying attention to the charts and the markets on Thursday morning UK time. The S&P has made a new low, but on a closing basis we are equal to the close of the prior low, so signs of weakness and also no technical damage, although that is definitely a lower low. Do we come up and break this trend line? I don't know. I would think this week is just going to be nonsense and chop. The Fed, of course, could signal that it's going to break markets deliberately, and then that opens up an enormous fall down here. But I would think we're just going to get an enormous amount of chop before we actually make a decision. Does that decision resolve as a breakout of this trend line to the upside, or does this decision that we make resolve to the downside? I don't know. I'm not going to pretend to know. I'm just going to wait and see what the FOMC meeting produces. I'm going to see what the Fed's decision is, and then we will adjust accordingly. Ultimately, I think only two things can really happen. Either the majority of this damage is priced in, and the Fed will be... You've got to understand, if the Fed hints at anything at all dovish, these markets are going to resolve to the upside. Most of this is come from, not from the actual rate raises, but from the uncertainty. The thing that markets hate the most is uncertainty. When the market doesn't know what's going to come next, then markets behave in the worst way. So the market's least favorite thing is uncertainty. So all it really takes is for the Fed to provide some certainty. Once the markets know the outcome, then we will get a proper decisive move from the markets. Until we have that clarity, the markets are not going to behave properly. So all it would take is for the Fed to hint at a dovish pivot, to hint at slowing down on quantitative tightening, on running off its balance sheet, on calming down on raising rates, and the market will fly. It will break this trend line and we will see new highs. Conversely, if the Fed is hell-bent on breaking markets and therefore will continue to raise rates and takes a very hawkish stance, or starts to use threatening language like we're going to aggressively run off the balance sheet, then that absolutely opens up these lower levels down here. So I don't know, nobody does, but we will find out soon enough, won't we? Meeting starts on Wednesday. I think it finishes Thursday, so we'll have some answers by then. I expect an awful lot of chop in the meantime, and so I'll be watching. My game plan for clarity is my preferred outcome is that we crack this trend line at some point, and then I will enter a long position off of the break of this trend line. If the Fed signals absolutely nothing but hawkishness and wants to do 10 rate rises this year, then I will open a short once we've got that confirmed, because we will be forming one of these COVID plunges. But for now, just looking for some clarity. We have got the dollar. The dollar's still parabolic. It has broken this downward sloping trend line, chopping around here. I would think this has to be coming to a local top. Maybe it pulls back, forms a double top, and then resolves downwards. There's always, of course, the chance that we're going to run the hundreds up into the 110 level. If you haven't seen the Dixie video explaining why this is happening despite all of the inflation, I'll put a card on the top right of the screen for that now. Go and watch that. But of course, if this can break down, if this can finally, usually when things get this extended, they resolve to the downside. And if that happens, it's going to set up an enormous bull run in risk assets, and you would think precious metals would benefit. Looking at precious metals here, this story kind of looks bad initially, although we could absolutely still chop around and then break this trend line, as I've sort of indicated before. We are possibly coming in for a back test of this breakout of this this wedge structure. So yeah, is this an area of support that we're going to bounce? Are we going to come down here and then work our way up to this trend line and break it? My bias is still to the upside. However, I'm going to be clear about this. If we lose this and fall back into this range, I'm not going to tolerate that very long before I abandon my bull thesis. If we are really about to start a big bull run for gold, if we really are about to start a huge run up into this area, then gold needs to get its arse in gear pretty sharpish. If we end up down here chopping around for a while, that is going to open up a big move down to the 1400s. I can't really say justifiably, if we break below here and start to chop around for a bit, that the bull thesis is still intact. What we want to see now is a back test of this breakout and then a crack of this trend line to resume an upward trend. That's what I really want to see. And if we don't, then like I said, I'm going to have to admit that something is telling me that I'm wrong about this. Silver right back down to the bottom of the range, absolutely great. Obviously we need to see this hold, but silver will follow gold. So if we can get a bounce and a breakout, then you know what's going to happen to silver. Silver's going to bounce off of here and sets up another great opportunity. I'll be trading this live again on the channel, so you'll get to see how I deal with that. Miners, same story. And Bitcoin still sideways, still boring. You know what I think? Still going to make it up into this box and then have a decision to make. Nothing really changed for now. I got this here. We'll take a look at this. It says the Fed will determine the fate of the market. 5 things to know in Bitcoin this week. So as I said earlier, we've got the FOMC meeting this week, and the rate hike announcement is going to be in focus. I expect volatility, and we could see 30,000 quite easily, I guess, couldn't we? Yeah, it's absolutely feasible that we could wick down to 30k. It's absolutely feasible that we could wick up to 50. We may well do both, since it's FOMC, or of course it could be a non-event. Wouldn't be the first time I've been expecting whipsaw action, and the FOMC is just a non-event. But I think that markets are pretty on edge at the moment, so I think we're going to see a lot of swings. Keep in mind though, inflation is running rampant worldwide. Keep that in mind, because ultimately, whilst the price can short-term be disconnected from reality, the reality is that inflation is still a severe problem, and eventually assets like gold and Bitcoin will price this incorrectly. Having a quick look here, the Bitcoin monthly returns for May. May is, with the exception of a couple of these large drawdowns, a 19% and a 35%. Majority of historic Mays for Bitcoin have been either very mild drawdowns, relative to Bitcoin of course, or pretty strong green months. So you can't really use this to predict anything, but there is a seasonality to Bitcoin, and it suggests that perhaps May might not be the worst month ever. There's a quote here: "It's risky to anticipate, better to react." I agree completely. It says, "I'd love to see a 26k washout." I don't think this is the thing. We got to be close to a low. I don't think it can go much lower than 26, and I don't even necessarily think we're going to go there. We'd have to see the Fed really breaking markets to see that. But in a way, wouldn't it be nice to just get a wick down, wash out any last remaining week longs, and then we can start a proper uptrend again? It's going to resolve to the upside eventually, but I do think it's a bit early at the moment. I think we first need to sort of grind up here to wreck a few bulls, make sure that the bulls think that we've started a new uptrend, and then we can destroy those, make the new low, and then we can actually finally start our uptrend. I think that's what Bitcoin likes to do. This article covers the dollar strength. I've already kind of covered that, so we'll skip over this. Illiquid supply still outweighs the price dip significance. So the proportion of Bitcoin supply dormant for at least a year has reached a new all-time high last week. I covered this on a previous video as well. So people are buying Bitcoin, they are withdrawing it from exchanges, and they are holding it for at least a year. So if people continue to do that, it's hard to see a sustainable downtrend or dip form, really. You can see the illiquid supply change here. Doesn't really look like a top at the moment, although that is, of course, just one metric. The fear and greed index, we have exited extreme fear for now. So that's also indicative of a bounce incoming. So overall, still sideways, still doing Bitcoin things. Like I said, the Fed is really going to cause a lot of chop, and we're not going to make any decisions until the end of the week when the FOMC meeting is over and the market has clarity. That's assuming it gets clarity. The worst thing markets could possibly get is for the Fed to just muddy the water and not make anything clear, but I don't think there's very much chance of that. In other news, Ethereum network Q1 revenue grew 46% to 2.4 billion. The token inflation rate has dropped to just 0.51%. So obviously this is good for Ethereum. People are using the network and they're paying their enormous fees, and this has generated $2.4 billion in the first quarter of 2022. Interestingly, about 87% or 2.1 billion of this revenue was removed from ETH circulating supply through its burning mechanism, and this burning mechanism was made possible by the network's EIP 1559 upgrade that was carried out in August last year. So as a consequence of this token burning process, the ETH network inflation rate, a metric that measures the net change of supply in Ethereum tokens, dropped from 1.1 to just 0.51 during Q1. Ethereum trying to emulate Bitcoin's deflationary supply using a different mechanism, using a burning process, which obviously Bitcoin doesn't use. But I have to wonder if this is long-term good for the ecosystem. I mean, short-term it should be good for price appreciation. But if you think about ETH as gas, or ETH as oil for the economy, I mean, how would the economy on the long term be impacted if oil just continuously was deflationary and kept going up indefinitely in price? It's going to be really expensive to fuel the tractors and the airplanes. Transportation is going to be expensive. Production of stuff is going to be expensive. I'm not convinced that long term this is the way forward for Ethereum, but that remains to be seen. For now, holders should enjoy a little bit of price appreciation off the back of the deflationary mechanism that's been put in. And at the same time, the ETH is about to undergo a switch from proof of work to proof of stake, from consensus mechanism to the JP Morgan layer. If you know, you know. So approximately 9.2% of the total ETH supply is already staked in anticipation of this merge. The Swiss National Bank, buying Bitcoin is not a problem for us. You love to see it. Switzerland's central bank, the Swiss National Bank, says buying and holding Bitcoin as a reserve currency is not a problem for the bank. We can arrange the technical and operative conditions relatively quickly. When we are convinced we must have Bitcoin on our balance sheet. I look forward to seeing Switzerland add Bitcoin to its central bank's reserves. Of course, this is eventually going to be the standard. All central banks will hold a portion of Bitcoin on their balance sheet, and game theory will sort of force them. As one or two of them start to do this, the rest of them will want to do it as quickly as possible, so as not to lose out on the opportunity and the gains that their competitors and other countries and other central banks are making in the process. You can think about this as the same for corporations. The companies like MicroStrategy and Tesla that have already got a lot of Bitcoin on their balance sheet, and Square, so on and so forth, they're so ahead of the curve because if it takes a few more years for the rest of these big companies to start doing it, then these other companies are going to pay an enormous premium. They're going to pay about 10 times as much for their Bitcoin as Tesla and MicroStrategy have. So by the time these other companies catch up and start adding Bitcoin to their reserves, you know, Tesla and MicroStrategy are going to make tens of billions from their Bitcoin holdings. So there is going to be a gold rush, in my opinion, although it will be a Bitcoin rush as central banks and corporations race to add this asset to their balance sheets. Lastly, Solana co-founder believes Bitcoin needs to change to proof of stake consensus to remain relevant. This is a joke. There's this narrative going around that that Bitcoin needs to change to proof of stake because of its environmental impacts and all of that sort of thing. This is a joke. I almost don't want to give it any energy, but I feel like I should. If anyone thinks the Bitcoin miners are going to agree to go to proof of stake, then they're absolutely smoking crack. There's no way. The Bitcoin network has, over the last 13 years, has had the opportunity. We could have easily chosen to go down on the security and go down on the energy consumption, and we would have got, for trading off that, we would have got less security and we would have had more speed, more transaction throughput. The network chose they didn't want that. The network decided we don't want faster transactions, we don't want more throughput. What we want is the most secure, the most unfuckwithable money on the planet, and that is what Bitcoin has chosen. Nobody can fuck with Bitcoin. Nobody can do anything about Bitcoin. It exists in proof of work for a reason. So the notion that we're going to move to proof of stake because of the environment or whatever else is just nonsense. Like, there's no chance. And these people like Solana, they can want Bitcoin to move off of proof of stake. The Chris Larson from Ripple has also, I covered this recently on my channel, has put up millions of dollars of money to try to fight proof of work for Bitcoin and get them to switch to proof of stake. But it's just not going to happen. Like, you're just never going to convince people to move to proof of stake. You're just not going to do it. Why would you? Do you want your Bitcoin to be less secure? Do you really? Like, for the sake of the environment, which is also nonsense, because as you know, the energy used to mine Bitcoin is mostly renewable anyway, and they take excess energy and use it to mine Bitcoin. So this is just absolutely nonsense. But I guess it's gonna be a theme. They're gonna keep trying for a while until the rest of the world realizes that it's nonsense. Very few people realize this at the moment, but anyway, rant over. In summary, FOMC, if you're trading, you're gonna get chopped up, in my opinion, unless you're a elite level scalp trader. I'm going fishing. I'll be back on Thursday to see what's going on. And until next time, if you found value here, subscribe to the channel. I'm your boy Camel. Take care.